Good evening, guys. I'm back with the US stock market review for Monday, April 27th. Market just closed at 4 p.m. and all the indexes were up. As you can see, all the indexes are in green. Dow Jones of 30 stocks went up by 360 points. S&P 500 also up. Nasdaq as well as Russell 2000 with small and medium cap companies are also up. Volatility index is down by 3 points. That means there's less volatility. As you can see, Dow Jones up by 360 points. Most of the stocks in Dow 30 like Apple, Verizon, ExxonMobil, Caterpillar, 3M, they're all up. And as you can see, the Dow Jones had gone up to 18,000 just last month, so it's almost up by 6,000 points in a month. Even though coronavirus situation has not improved and more people are dying, but still stock market keeps going up. So unfortunately market doesn't reflect what's going on Main Street. Here we go. These are some of the stocks up today. JP Morgan, Disney, Home Depot. These are all the part of Dow Jones 30 index. Some of the other stocks like Tesla up by $73, almost 10%. Amazon up by 34%. Some of the other technology stocks like Nvidia, Roku, Adobe, Salesforce.com, they're all up. And these are some of the earnings coming up this week. Alphabet, which is Google, coming up with earnings tomorrow. Other FANG stocks like Microsoft, Facebook, Tesla, they're all coming up with the earnings on Wednesday. Starbucks is coming out with earnings tomorrow. And then Thursday we have Visa, McDonald's, Philip Morris, which is known now as Altria, and then we have ExxonMobil, the oil company, on Friday. So we are going to analyze Amazon financial statements and let's see if it makes sense to invest in this company at present levels or not. So as usual, we will see what products Amazon has, what locations they are selling the products at, then the financial statements, income statement, balance sheet, and cash flow we'll be looking at, and then some of the key numbers, and then any recent good news or any news which can impact Amazon's profitability for short term as well as long term, and then the stock performance and where it can go and should you be investing or not. So Amazon they have three segments: North America, which is their US presence. They also have non-US presence, which is international segment, and then they have this AWS, which is their cloud business. 798,000 employees worldwide, sort of big company. But the biggest risk for Amazon is the competition from Walmart, Costco, BJ's, and other mom and pop shops. So here we go, the income statement, balance sheet, and cash flow of Amazon. So the revenue, as you can see, has grown from 107 billion to 280 billion in 5 years. So huge exponential growth, as well as bottom line net income has gone up from 596 million in 2015 to 12 billion in 2019. So 12 billion of profit on 280 billion of sales. So almost that gives you, I would say, 5%. So net margin is 5% here. And then the earnings per share has gone up from 1.25 in 2015 to almost $23. So almost has gone up 20 times in 5 years. And the balance sheet, again, the total assets have been going up from 64 billion to 162 billion in 2018, and now 225 billion in 2019. But at the same time, they have external borrowings from banks, which is also going up, and it's almost like 75 billion right now in 2019. So that's one of the negative factor. So as you can see, the sales growth, all three segments are doing well: North America, international, and cloud business. And you can see the growth. All three segments have gone up, and overall revenue to the top line has grown up to 280 billion. And they're catching up to Walmart. Walmart is the biggest company in the world in terms of revenue. Their revenue is almost 530 billion. So Amazon revenue is catching up. Net income is also going up from 12 to 14 billion. So some of the highlights here, as I said, top line, revenue, bottom line, net income and earnings per share, all three have gone up substantially in last 4 to 5 years. Balance sheet again, huge cash of 36 billion, which helped Amazon to acquire Whole Foods in 2017. Total assets have gone up 225 billion from 162 billion last year, which has equity of 62 billion. But one of the negative factors, as I highlighted, is the borrowings from banks, which is 75 billion. The cash flow, nothing to worry. Operating cash flow has gone up from 18 to 38 billion in just 1 year. So enormous growth in one word. Everything looks good except the borrowings. And one of the recent news here is the Amazon's, they are hiring 175,000 employees. That's the news which came out today in spite of COVID-19. So that is going to help US economy. But again, let's look at the stock price, whether this will help the stock price or not. 52-week high, 2,461, as recent as April 16. Earnings, as I said, coming up on Thursday after close. And one of the few companies, Amazon, who has done well in coronavirus environment. Here you can see the 52-week high, 2461, and the 52-week low is 1626. So that's your downward risk. Stock has been moving between 1600 and 2400 in last 3 months. And year to date, since January, the stock has gone up by 28%. But the revenue is really growing, and you can see return on in equity is very healthy, 22%. Debt to equity, which is little higher, but still less than 1. The gross margin is 40%. So these are all good numbers. But the problem is the price earning ratio. The stock price related to earnings is very expensive, 103, and earnings before tax, interest, tax, depreciation and amortization, 36 billion, which is not bad. So whether to invest in the stock or not, as we just saw all the numbers, the analysts expect the stock to touch 3,600. The whole Wall Street is bullish on Amazon. From current level of 2,400, they expect the stock price to go to 3,600 in next 2 years, almost 50% jump. This is the minimum they're expecting, could go up to 5,000. Earnings are coming on Thursday after the market close, but the biggest risk is the competition and the technology. But Walmart is catching up on the technology and lost market share. They've been also acquiring a lot of companies. And then some of the negative factors here are the CEO, Amazon CEO, Jeff Bezos, who's not a very popular guy in USA, richest guy in the world, but people don't like him. And then a lot of negative publicity around Amazon's treatment of its employees, long hours, stressful work environment, not offering safe environment in coronavirus situation, and a lot of YouTube videos where you can see employees are working under a lot of pressure. They have to, complete the packages, which is very unrealistic. So all said and done, but if you're looking for the stock price appreciation, yes, stock will go up at least by $500 in next 6 to 9 months. So my recommendation would be to buy the stock for short term. That's it from me, and I will see you tomorrow with Apple's analysis, Apple's balance sheet. We'll be analyzing Apple financials and see whether we should invest Apple or not. As a lot of other companies like Apple, Google, Microsoft are also coming up with the earnings by Friday. See you tomorrow evening. Stay safe. Bye.